Welcome back. You're watching Market Fatatfat right here on ET Now, a show where we get you all the stocks based on news flows as well as technicals. That's the buzzing stocks. Right now on technicals, we have Sameet Chavan joining us on the show. Very good afternoon to you, Sameet. Thank you so much for joining us. And the first stock that you're going to talk about is Bajaj Finserv. How is this one looking on the charts to you? And do you think it's time to look at this heavyweight?
Looks quite promising. This has been a laggard, since the early part of this calendar year. But recently we saw early signs of revival, and today we are seeing good traction in this counter. The stock is poised for a move towards its, 200-day simple moving average, which is placed around 1500, 1520. So it looks good at a current level. Risk reward is quite favorable. One can buy at current level. Target would be somewhere around 1500, 1530, as I said. And as a trader, the stop loss now can be placed around 1410 rupees.
Okay, keep an eye out on Bajaj Finserv and all those levels. But moving on to the next one, and Shree Cement, and focus on the back of its numbers as well, Lisa.
Well, if we look at the numbers, despite low growth on year-on-year basis, the counter was in demand, and that was on the back of strong earnings on sequential basis. The stock rose as much as 4% and touched an intraday high of 25,426. So if we look at the sequential numbers, the company's profit had almost doubled, and even the EBITDA that rose 26% on a Q-on-Q basis. Net profit stood at 546 crore versus 277 crore last quarter. Margin also improved 19% versus 17% last quarter, and that was because of the high sales in the premium segment. That the share stood at around 7.5% this quarter, last quarter versus 7.2% in Q3, and also the total sales volume that increased 10% on quarter-on-quarter basis. The global brokerages, they are quite upbeat on Shree Cement. With the Morgan Stanley, they maintained an equal weight rating on the stock at 25,600 per share, and also Jefferies has retained a hold call with a target price of 21,850 on the stock. So that was on Shree Cement. It's trading with a positive bias as we speak.
All right, Shree Cement is not the only counter that is in focus on back office earnings. Is also BPCL, isn't it, Vamakshi?
Well, yes, Cheryl, this counter is in focus on the back of its numbers, and just like other OMCs, BPCL has also surprised positively despite the drop that we saw in ATF as well as the diesel spread. Now, net revenue has come in marginally lower by almost 1% on a sequential basis, standing at 1,18,112 crores. But it is the EBITDA that has actually seen an uptick of almost 163% on a sequential basis and stands at 11,154 crores. The margins have also improved from 3.6% to 9.4% on a sequential basis. The company has reported a net profit of almost 6,478 crores, up over nearly 3 times in the same quarter. Now, when we look at the brokerage note that came in from Bank of America, the PAT has actually stood at a decadal high. The Q4 earnings beat was led by the refining as well as higher domestic sales. Marketing margins have positively impacted by the fall in crude prices, and despite that, all these positive factors, Bank of America has actually maintained an underperformed rating with a target price of 315. But all in all, a good set of numbers is the reason why BPCL is in focus today. As of now, the stock is trading higher by almost 1.5%.
Okay, let's move on and talk about another earnings candidate, and that is Gujarat Alkalis. Now, this one is in focus. When you look at the numbers, there have been a disappointing set numbers on the stock. Actually, today fell as much as 5%. Yes, recovered from those lows, but still trading with a decline of 2.3% as of now. Now, when you look at the numbers, the revenue came in at 1,138 crores. Quarter-on-quarter basis, yes, we're seeing a growth coming in there. But when you look at it overall, in terms of there was a sharp decline in terms of the profit, 67.8% decline, and profits came in at 71 crores from 221 crores in the same quarter last year as well. Other than that, when you look at it, why was there a drag in the bottom line of the company? Significantly due to the weaker operating performances of the company, and EBITDA also, the EBITDA margin also eroded sharply to 23.8% in quarter 4 versus 30.7% as well. So yes, there was a clear weakness in the bottom line, the weakness that came in even in the EBITDA performance of the company as well.
All right, moving on, let's talk about Cocoa Camlin, and that particular counter at one point in time was trading higher by about 6.6%, taking the stock to the highest level since October 2018. As you can see on the screen right now, the stock has given up all of those morning gains. The company said that their Q4 net profit nearly tripled and the total revenue from operation rose by approximately 32% on a year-on-year basis. So healthy numbers is one of the reasons why the stock was gaining in trade. But like I mentioned earlier as well, it is all of those gains. Approximately 6% uptick is what the stock had registered. Now it is down about 1.6%, and it has actually gone ahead and snapped a 2-day gaining streak.
Let's move on, and on the charts, Sameet, you've picked out India Cements for us. What should we be expecting here from the company in terms of the charts? Are you expecting a sharp up move now coming in for the stock after that correction we've seen in the stock in the last 6 months?
The stock has been, muted since last 3 to 4 months, but in last 3 days it has gained some traction. And today, on an intraday basis, it managed to surpass its recent level of 197. So considering its, daily and hourly chart structure, we expect this stock to confirm a breakout beyond 200 quite soon. So overall, it looks promising. Only a follow-up move beyond 200 is, important to confirm breakout. And once that happens, then this stock can certainly head towards 208, 212, which is the next, cluster of resistances for this particular counter. Overall, we are quite upbeat on this counter, and soon we would expect breakout happening beyond 200. As far as supports are concerned, 185, 190 should act as a very strong support zone now.
All right, moving on. Lisa, let's talk about Camlin Fine. Why is this one in focus?
On the back of results, Cheryl, Camlin Fine Science, they reported good numbers on parameters like revenue, EBITDA as well as margin. But what was a dampener for them was the net profit, which was down 73% on year-on-year basis and stood at 3 crore versus 13 crore last year. We look at the revenue, that was up 9.6%. EBITDA was up 80.2% on year-on-year basis. Margin also that expanded to 10% versus 6% last year. So what happened to the net profit was because of the exceptional items that they recognized, and this was related to the impairment loss which was taken on account of the patent in the nature of process technical know-how for the manufacturing facility in which they have with the Chinese joint venture. So the management stated that this plant will commence the manufacturing in Q4 FY23, and the ramp up in the sales contribution that will happen in the coming quarters. So that was Camlin Fine Science, and it is trading with a negative bias. It's down 2.2% as we speak.
Okay, let's move on and talk about stock number 25 and Kajaria Ceramics. Vamakshi, why have you picked out this one today?
Well, Vinny, this counter is in focus on the back of a brokerage note that has actually come in from Motilal Oswal. They've initiated coverage on this counter with a buy rating and a target price of 1,490 per share, which represents an upside of almost 20% from the current levels. Now, what Motilal Oswal believes is that Kajaria Ceramics has gained market share steadily, and that has been underpinned by superior distribution network. And this in turn has led to higher volume as well as revenue share. Apart from that, the company is also raising capacities of faucet sanitary ware segments by almost 0.6 million pieces each. They believe that the company enjoys industry-leading margins driven by premium pricing. They enjoy premium pricing of almost 5 to 6% higher than other branded competitors, and they also believe that the company is expected to post a 30% earnings CAGR from FY23 to FY25. The company does have a healthy balance sheet, and they believe that this in turn will help the company maintain its premium multiples. So given all these positive factors, Motilal Oswal has initiated coverage, given a buy rating, target price of 1,490 per share, and that is the reason why the stock is gaining away in trade today, up nearly 2.5% as we speak.
All right, moving on. Sameet, TCS, how is this one looking in the charts to you?
Yesterday also we saw some underperformance from the financial space, but the much needed impetus was provided by the entire IT space. The helping hand was clearly provided by IT space, and that's the reason Nifty reclaimed 8,300 during yesterday's session. And today also in the morning session, we witnessed some follow-up move, but since they have been rallying since last 2 to 3 trading sessions, we saw some profit booking at higher level. But overall, with a slightly short-term perspective, we expect the entire IT space to do well. So TCS being the bellwether stock within this space, we expect the stock now come out its long slumber phase and head towards 3,400, 3,450. So we are quite hopeful on this particular counter. As far as supports are concerned, there's a strong base that has formed somewhere around 3,150, 3,200 for TCS.
Yes, right. That's the take coming in on TCS. Let's talk about Shanti Gears then. And Shanti Gears in today's trading session has hit a record high level. It gained as much as 1.3%. Fizzled off from there on. HDFC Securities has said that the company will benefit from likely increase in demand for gears led by strong growth in steel, cement, power and paper industries. They've also said that the possibilities of jointly marketing products could lead to a strong top-line growth as well as lower costs, resulting in margin expansion going forward for the company. Also, however, you have HDFC Securities flagged the risk of margin susceptibility to raw material cost fluctuations. So Shanti Gears is the stock that is in focus. For the most part of the trading session was in the positive territory, now it's slipped and is trading lower by about 1.5%.
Let's move on and talk about another earnings candidate, and that is Dhanlaxmi Bank. Now, this one, when you look at it, actually the stock jumped as much as 3% on wider profits that were recorded by the company in Q4. Now, when you look at it, as of now, the stock has given up those gains, trading with gains of approximately 1% in trade. Let's look at what the numbers were looking like. When you look at it in terms of what they reported for the NII of the company, that came in at 115 crores versus 96 crores last year. Profits of the companies coming in at 38 crores versus 23.4 crores as well. So an improvement in terms of the profits of the company as well. When you look at just in terms of the non-performing assets, across non-performing assets, that stood at 5.19% versus in terms of on a quarter-on-quarter basis, it was at 5.83%. Sequentially, obviously, we're seeing an improvement in terms of the asset quality of the company, whether GNPA or NNPAs as well, and that is why that stock was buzzing in trade, as of now also holding on to gains of almost 1% in trade.
All right, moving on, let's talk about Apollo Tyres then. Sameet, how is this one looking in the charts to you? Do you think that this one is a good company to bet on in the tyre space?
Clearly, this stock is on a roll. Recently, this stock rallied from the levels of 300 toward 380, which was then followed by some consolidation of merely a couple of weeks' time. And today, this stock, managed to resume its higher degree uptrend. The kind of price and volume activity that we have been witnessing in this counter since last 1.5 months, it suggests that the stock is, likely to surpass 400 mark quite soon. So overall, the chart structure looks quite robust, and from here on, since the stock has already resumed its uptrend, we expect 390 to be tested quite soon, and then probably the stock can reach its milestone of 400 and beyond levels.
All right, so that's the take coming in on Apollo Tyres. You have flashed on the bottom of the screen. I'll have my colleague Ajay join us shortly to take us through what exactly his sources are telling him. But for now, let's put the spotlight on Adani Group counters then. And remember that this is third day of gains coming in for most of the Adani Group names. If you look at Adani Ports on an intraday basis, that particular counter actually erased all of its losses since the Jan 24th report by Hindenburg. Remember, the other Adani Group counters, like I mentioned, were trading higher by about 5 to 18%. This after the SC panel kind of gave a clean sheet where they said that it was not possible to conclude whether there has been a regulatory failure regarding the alleged price manipulations in Adani Group companies. Also, you had Adani Group counters, the market cap also see a significant recovery from those lows. And today you had Adani Ports also that actually erased all of the gains that it had logged post the Hindenburg report. So yes, keep an eye out on all the Adani Group counters. A crucial one coming in, third day of gains coming in for all of them. You have Adani Enterprises, Adani Wilmar, Ambuja Cements, ACC, NDTV, all of them seeing good gains in today's trading session. But let's touch base with my colleague Ajay Sharma, who is picking up this exclusive story that's flashing on the bottom of your screen. And Ajay, looks like GQG Partners, as promised, they are very much interested in the Adani Group counters. And what are they saying this time around?
Well, that's correct. We are picking up from our sources, Cheryl, that GQG Partners, the $92 billion fund, which had in March deployed close to $1.8 billion in 4 Adani Group stocks, have been buying the stocks additional in the last couple of days. We understand that around $250 million worth of additional purchases have been made in these Adani Group stocks by Rajiv Jain of GQG Partners. And we understand that institutional sales guys and bankers also tell us that he is also very keen to participate in future fundraisers as well. As we all know that around 21,000 crore worth of QIP or equity instruments is something which Adani Group is looking at to raise funds from additionally, and they've informed the exchanges around it. We are told that Rajiv Jain has actually given his interest to the institutional sales guys and bankers that in this additional fundraise as well. So basically he wants to raise, the overall bet he's taking on Adani Group. So one was at that time when he had come $1.8 billion, around that time the fresh purchases was done, there were still some uncertainties. But after the Supreme Court verdict has come, a lot of overhang has been lifted, uncertainties have gone, and now it seems that this is the reason why he is keen to raise stakes. He calls them one of the best infrastructure assets in the country. In our previous interaction as well, when we spoke to him earlier, right after this big deal. But we are picking up from our sources that he may increase his bet on these 4-5 stocks quite meaningfully from open market as well as from the offering which are likely to happen from the company level.
Okay, those were the exclusive details that we have coming in on Adani Group, and obviously GQG Partner has been a buyer in Adani Group stocks over the last few days. But let's move on and talk about another stock and continue with all the other stocks that are buzzing in trade. Concord, Sameet, on the charts, how is this one looking like to you? What are the indications you're getting on the charts now?
This stock is, making its multi-month highs. Stock has already, undergone a massive price-wise as well as time-wise consolidation, and recently it has gained some sort of momentum. Today we are seeing breakout happening beyond its recent hurdles of 640, and as I said, the stock is now trading at its 3-month highest level. So from here on, we expect this journey to continue. 680, 685, these are the next levels to watch out for. And on the lower side now, there's a strong base which has already been formed somewhere around 600, 620. And now we can see intermediate support levels shifting higher towards 640, 645 levels. So any minor dip in this particular counter would be a good buying opportunity. 680, 85, these are the next levels to watch out for.
All right, moving on. Lisa, ITI, another earnings candidate. How are the numbers?
So actually it's on the back of them bagging an order from BSNL. So telecom equipment manufacturer, that is ITI Limited, they gained 4%, and this is after they received advance purchase orders from BSNL for setting up the 4G infrastructure, and this is on the in the West Zone. So the contract that includes AMC services also for a period of 9 years. And the scope of the work includes planning, engineering, installation, and also AMC of 4G network for 23,600 sites in the West Zone for BSNL network. And the consortium partner, that is TCS, and they will be supplying, the supply period is around 18 to 24 months. So this is a significant milestone for ITI Limited, says the management, and they said that they will be partnering with BSNL to provide network in the remote areas of India, and also they have in the past also launched 2G and 3G GSM network successfully. So we can see ITI Limited trading with a positive bias of 4.2% as we speak on the back of this news flow.
Okay, so yes, now we have to start getting corrected because not everything is going to be earnings now.
Actually, I
so we will be taking note of that as well. And
come next week, it will be difficult to find buzzing stocks. I don't think that will be the case for Sameet, because on the charts he will be able to spot all those trend makers. But difficult for us back here at the studio, isn't it?
Absolutely. But let's move on to the next one. And Mamakshi, Aditya Birla Fashions also is in focus today. And again, not earnings, but a con call highlight coming in there.
Well, yes, after the company reported its numbers, there was a conference call, and in that conference call, the management has highlighted that in the fourth quarter, growth rate was impacted across segments, and that actually led to higher inventory as well as higher debt. Revenue growth, however, is expected to pick up from the second half of the year with the onset of the festive season. Net debt has risen to almost 1,420 crores, and that has come in on the back of lower than anticipated revenue as well as higher investments that the company made in the new businesses. And not just that, the company is expecting to further increase its debt as it continues to fund new businesses. Pantaloons, on the other hand, margins have been largely impacted by sluggishness in demand. They have in fact gone ahead and lowered the Pantaloon store addition guidance from 60 to 70 stores that we saw in FY23 to 40 to 50 crores in FY24, and they've given a soft market condition on the back of this. Now, they will, however, look to increase the pace of store addition once the demand environment improves. So, largely, those were all the important takeaways that have come in from ABFRL. Not a great set of numbers, but the management is sounding optimistic of a recovery from the second half, and maybe that's what is improving the sentiments as far as investors are concerned. The stock is up nearly 3%.
All right, that's ABFRL. That is actually seeing a marked recovery on back of management commentary post the con call. And actually, the numbers were weak. You have brokerages also that flagged off those points. But Sameet, let's talk about United Spirits. This stock, after seeing a great run, saw a huge, extended consolidation. Do you think the consolidatory phase is done for United Spirits? Can look at this one afresh?
Yes, this consolidation phase in technical terms can be called as a good accumulation pattern that we have been witnessing getting developed over the past 3 to 4 months, and the kind of price action that we are seeing in last couple of days, this pattern is now likely to give breakout from its recent highs of 825, 828 kind of zone, and once that happens, then next leg of the rally is likely to get unfolded in this particular counter. So overall, since the volumes have already picked up substantially over the past couple of weeks, we expect this stock to go, do well once it breaks out from its hurdle of 825 on a closing basis. If that happens, then next levels to watch out for would be around 860 to 870. Overall, the chart structure looks quite promising, and on the lower side now, any dip from current level towards say 800, 790 would be a good buying opportunity. And as a trader, one can keep a stop loss around 775 and go long for a target of 860 to 875.
Keep an eye out on those levels, 860 to 875 for United Spirits. But let's move on and talk about HEG. This one is in focus on the back of its numbers. We saw the stock price slump as much as 4% today in trade, as of now down 6% as well. When you look at it in terms of the bottom line of the company, that was a sharp impact that we saw coming in there. The profits of the company came in at 99 crores, impacted mainly by the lower top line as well as the operating numbers as well. Revenues of the company saw a decline of almost 8% on a year-on-year basis, while in terms of a sharp decline that we saw in the EBITDA and operating performance of the company as well. When you look at the margins of the company, they came in at 20.1% compared to 23.3% in Q4 FY24 as well. So clear weakness that we saw in terms of the margins, maybe because of the raw material cost also that was seeing an increase as well. So keep an eye out on HEG, as of now trading with a decline of 6% in trade.
All right, moving on, Sameet, Balakrishna Industries, how is this one looking on the charts to you?
This stock is on a roll since last couple of days. We have already seen a smart surge of nearly 10% in last 2 days, and the kind of volume activity that we have witnessed in last couple of days, it suggests that from here on this stock is likely to head towards 2500 plus levels. So overall, if you see with a slightly broader perspective, the stock has already confirmed its multi-month breakout from hurdle of 2300, 2320, and since it is accompanied by stronger volumes, 2500, 2550 in the near term is clearly on cards. But if we have to take slightly broader view, the stock is clearly poised for retesting its previous highs of 2800.
Right, let's put the spotlight then on Motherson Sumi Wiring. Yes, this particular counter did come out with its numbers, but that's not the reason why this one is in focus. You saw a block deal take place of about 1.1 crore shares earlier in the day, and post the block deal, you saw the stock actually see a good jump, about 2% uptick right now coming in from Motherson Sumi Wirings. We're yet to get the details about who are the buyers and the sellers of the deal, but this one is definitely one to watch out for.
Let's move on and talk about IOC on the charts then. And when you're looking at it, IOC is trading and has been gaining traction in the last 6 months as well. It's picked up pace, Sameet, and at 89 rupees. Would you still suggest a buy after it's already run up almost 14% in the last 1 year?
See, this stock has been, outperformer within the oil marketing space. If you look at it, its recent price action, first, this stock confirmed a breakout from 78. Rallied smartly towards 86, 88, then a 3 to 4 days of profit booking, and again it has resumed its upward trend. It is now challenging its previous swing highs of 1991, and soon the kind of price and volume activity that we are witnessing, soon the stock is likely to give breakout from the hurdle of 1991. The kind of price action that we are witnessing, Will not be surprised to see this stock, entering the three-digit mark quite soon. So next levels to watch out for would be around, with a short-term perspective, 95, but with a slightly broader view, 105 to 110 levels cannot be ruled out.
All right, moving on then, Lisa, NACL, why is this one in focus?
So NACL has reported very good set of numbers, and we can see the stock surging up around 15% as we speak. The revenue was up 27% and stood at 599 crore. EBITDA also was up 68% and margin also expanded to 11.3% versus 8.5% last year. It has jumped the most in around 17 months, and even the trading volume, that was 50 times the 20-day average. So that's NACL Industries up 15% as we speak.
All right, that is NACL, and that indeed is the last stock that we are tracking on this edition of Market Fatafat. Thank you so much, Lisa, Vamak, Shree Cement, as well as Kunal for joining us on the show. And it's a goodbye for Vinny and myself. But before we actually wind down on this edition, we at Times Network are back with a flagship event, India Economic Conclave, which is all set to stage for driving India's economic agenda. And as we move forward on the path of integrated, equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy, but the global one as well. To pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, as well as corporate world. So get ready to catch all the action here on Times Network.